Well, the debt burden is simply the burden that the the weight that the loan that you acquired to start your business is exerting on your business, right? A couple of weeks ago, we did a show here where I talked about that most businesses fail before they turn 1 year, before their first 12 months. Most startups die before 12 months. There are so many reasons why that is the case, but one of the reasons would be that many businesses actually borrow money, to go into business, to start their business, and that's not right. So I don't know if I answered your question, Chiamaka.
Okay,
do I go on?
That's fair enough. Yeah, go on. Okay. Continue.
So basically, for me, I think it's a bad idea to borrow money to start a business. I think it's a bad idea. We also did a show here where I, taught you how to start different ways to fund businesses. And I did mention that the bank route is one of those ways, but that is not to say that I recommend that, as, best practice. It's not best practice.
So what's the best practice?
I'll get to that. Okay, to borrow money to start a business. The reason is that when you're starting a new business, you're charting into you're wading into uncharted waters, untraveled waters. You haven't been that route before. Mm-hmm. It's an idea you have, and then you want to start the business. You haven't really gone through that business for 1 month. Neither have you done it for 6 months. Neither have you done it for 1 year. So you don't really know what the outcome of the business is going to be. Yes, I also have said that it's good to do a feasibility study and to do a business plan. But a lot of times you do a feasibility study and it doesn't really turn out like it's supposed to be for a number of reasons. The person that did the feasibility study may not have done a proper work. You not being a professional would take the feasibility study as proof. Then the other thing is that you may have done feasibility study in a different season. Say you did a feasibility study when Buhari was president and dollar was 450. And now Tinubu.
I'm just imagining it was going to be like right now.
Exactly. And now Tinubu is president. Policies are different. Political ideology is different. And dollar is at 1,500, per naira, 1,500 naira per dollar. So it's not the same. The outcome is not going to be the same. But anyways, because of these reasons, I do not recommend that you borrow money to start a business. Now, most businesses borrow money to start a business. And when they start the business, you actually begin to find out that, it wasn't really as easy as they thought it would be. And they end up struggling, right? Mm-hmm. Now, anybody that gives you a loan usually expects some kind of interest back because it's their business. They are in the business of lending money. And so a lot of the times, these loans are real. These interest rates are very high. Sometimes it's 40%, monthly. Can you imagine that you borrowed 5 million naira to start a business and somebody's charging you 40% on that monthly, right? It's a lot of money. So you see that you're actually struggling. If you actually manage to pay that loan, you find out that lots and lots of your profit that is supposed to go into growing the business is actually going to that lender. And so you end up working for the lender. Now, with the banks, it's what is the current interest rate on bank loans? For personal loans, APR ranges from 9.57% to 35.99%, right? And the organization fee rates from 3 to 8% of the loan amount, right? So the point is, for example, you go to the bank to take a loan. People don't understand this. You ask the bank to give you 5 million naira. Okay, they agree they're going to give you 5 million naira, but it's calculated at 30% or close to 40%, going by current trends right now. But what you do not put into consideration is that the banks are so good at extorting you. There are other charges that are away aside from that 30 to 40% interest that is established, right? So they charge you what they call insurance fee. They charge you a number of other fees. Mm-hmm. So you have asked for 5 million. When the bank pays the money and you get the alert in your account, what you're actually seeing is about 4.6 million gone already. Mm-hmm. It's not part of your interest that you're going to be paying back. This is the bank stealing from you.
Should we call it stealing?
That's what I call it. I don't know what you want to call it, but this is what I call it. I call a spade a spade. That is
because the bank has its own policies. I'm not trying to argue with you. Go ahead.
The point is the bank tells you that they're giving you a loan at 30% or at 40%. So you're calculating 40%. That's what you factored in, and so you're trying to organize yourself so that you can pay that. And then when the loan hits your account, you're seeing 4.6 million in your account. So that is to say that a good chunk has been cut off, and then you start asking questions. Why is this? Why is that? You've already signed the contract. It's been approved. It's been paid. You can't help but go ahead with the money. So at the end of the day, it affects your business. And so this is part of why a lot of businesses fail, right? So what I'm trying to say in essence is that you want to start a small scale business. Do not decide that the best way to go about it is take a loan. Somebody called me, somebody who listens to this program, called me last week and said, hey, Mr. Tony, I'm trying to borrow 200,000 naira to go into business. What do I put that money into, right? And the first thing I asked was, what's the interest rate? Right? He told me it wasn't bad. The interest rate wasn't bad, right? But I told him it's not the best way to go. Borrow money and start a business, right? But if you already did the deal, give me a little bit of time. Let me think about what you're going to do with that, because it's about 200,000 naira. It's not a lot of money. Let me think about what you can do with that money and give you proper advice. So if you're thinking about going to borrow money right now, you're listening to me to start a business, please don't do that. Look for alternative means, to fund your business. Look to friends and family who would give you funding without asking for high interest or interest at all, right? Now, what you cannot actually do is find somebody who would give you loan on the basis of equity instead of the basis of interest. Basis of equity means that, okay, you're giving me a loan to start this business, but I'm giving you 15 or 20% share in the business. So that is to say, you're not putting pressure on me right from the first month of the business to start paying interest, right? You can only get returns about a year after I started the business. So it gives you a breather. It allows you to breathe. It allows the business to breathe. There's no pressure to pay interest, and there's no pressure to take money out the business to pay back, right? So for me, that's the best way. Look for friends and family or institutions who are willing to lend you money on the basis of equity as against the basis of interest, so that your business can breathe. You don't need to start taking money out of the business to pay any loan. You want to run that business at least for 1 year and plow back every profit, because the best way to grow business is to plow back your profit. Now, instead of pay yourself a salary and instead of take money out to go pay loans, you take the profit that you make from the first month, you plow it right back into the business. What happens is that if you started the business with, say, 500,000 naira and you made a profit of 300,000 extra, so that means at the end of the first month you have 800,000 in your account, right? So what I recommend is that you take 750,000 out of that money and plow it back into the business. What it does for you is that it helps your business grow month on month until you've struck 1 year. So at the end of 1 year mark, you look at your business, you look back and you see the mileage that you've covered because you did the smart thing of plowing back profit, right? Now, you can do that because nobody's pressuring you to pay anything. So I recommend that a great deal. Okay. Now, the only time I recommend that you borrow money to start a business is for a business that you've already done for a number of years. Now you know the
secrets, you know
the secrets, you know how the business acts, you know how the business reacts to market forces, you know how the business, you know everything about the business. You can forecast your profit every month.
Not that you're a first timer, you're still trying to find your bearing.
Right? So that kind of business, you know everything about this business, you can project your profit. That is the only time I recommend you take a loan to grow that business or to take the business to the next level, because you know what you're going to expect in that business.
Okay, all right. The basis of our conversation this morning is the effects of debt burden. So let's look at the effects. Does debt burden hurt any business?
Of course. I just have said that in the narrative that I just gave now, but I'll point it out. Number one effect is that business can die before it turns 1 year. Number two effect is that the business struggles and you will never be able to give the best quality that you're supposed to give to your clients because you find yourself constantly struggling, right? Mm-hmm. Now, imagine where you need an extra blender. Say it's a food business, you need an extra high-power blender. You have one small one that is good for blending tomatoes, right? But you need another one that can crush, hard stuff. And you want to buy it, but you're thinking, okay, if I pull 50,000 naira out now to go buy this blender, I may not be able to pay the lender at the end of the month. And so you don't buy that blender, and it affects your productivity. It affects the quality of your products, right? So that is one way. The other way is that you personally, it's not good for your health because you're constantly afraid, right? It could lead to high blood pressure. It could even lead to a stroke or death or a heart attack. I've seen business people who have died because of a bank loan. I have a friend, a wealthy guy, a wealthy business partner who has another wealthy partner that took almost $1 billion to do a business, right? But something went wrong. Something went wrong with.
So this can even affect both the big and the small.
That's right.
Okay.
That's right. It's not just for the small business people. So the business didn't go as planned, right? And the community with which he did business kind of flipped it over and changed things over, and he couldn't pay the bank, and the bank started pressuring him, so he had a stroke. Right? Now he had a stroke. It affected his productivity, and the bank came and took the property. He had another stroke. So now he's in a vegetative state. So the bank, the loan is gone. The properties he put down for collateral are gone. The business is gone, right? And that's simply because he took a loan. So I say that don't take a bank loan, because it can affect your health. It can affect the productivity of the business. It can make your business struggle so bad. And as a matter of fact, one thing is sure: before 1 year, or at the most 3 years, the business dies. You lose everything put into it, right? Now the question is, why start a business with a loan when you know it's going to die in 1 year? It doesn't make sense, because it puts you in a lot of trouble. It makes you get a lot of enemies. The person who gave you money, who you're not able to pay, becomes an enemy. Both of you will not be in good terms. He'll be upset with you, and so he'll be talking to you anyhow. He may actually want to fight you, and then you're going to be like, this guy is embarrassing me. And so a relationship gets strained because of that business. So why do it in the first place, right? So don't be under pressure to start. You want to start. I understand there are no jobs. I understand that the fastest way to becoming wealthy is starting a business. I understand that it's the right thing to do to start a business, but plan. Don't be under pressure. Do not be in a hurry. Make plans. And that means that you have to, first of all, like I said, conceptualize your idea. The first step is, conceptualization. Get the idea of the business you want to do. Think it over. Then take it to paper. Second step will be do a feasibility study on the idea, like I said. Find a good professional who can do a feasibility study on the business. Now, and thirdly, do a business plan. Now, on the strength of this business plan, you can go to different individuals and institutions. Do not be in a hurry. You want to get it right. You want to start a business that's going to outlive you, not a business that's going to die in 1 year or 3 years at most, right? So you take the business plan and begin to go from bank to bank. Go from a lender, go to microfinance banks, go to major banks. But what you're asking for is lending on the basis of equity and not on the basis of interest, right? Now, if the microfinance bank won't deal and the investment banks won't deal, now you go to central bank or to the Bank of Industry. These are different other institutions that finance businesses that might be able to listen to you. If that doesn't work, then you could go the route of angel investors and equity providers. Like, there's so many of them. There's so many organizations on the internet where you can actually send them the business plan. But the business plan has to be top notch. It has to be beautiful, but it also has to be defendable. You have to know that business, at the tip of your finger, so that if they wake you up right now and say, "Tell me about this business," you can confidently reel out your vision for this business. And that contagiousness is what's going to make somebody trust you enough to give you money, really. So that is what I recommend when thinking of starting a business.
All right. You just made mention of microfinance banks and investment banks. So when it comes to borrowing policies, especially when you're borrowing to start up a business, are there the best options for people to go for? The microfinance banks and the investment banks? Well, the microfinance banks will charge a lower interest than the investment banks. The investment banks are usually bigger. Commercial banks, we call them, are bigger, and so they have bigger responsibilities, and so they're looking to make a lot more money, right? And then the other thing is that if you're a new borrower, actually, interest rates are really high because they don't know if you're going to pay or when you're going to pay. But if you're a customer that's been known, to pay, interest rates might come down, right? But then the thing is, microfinance banks will charge a lower interest on the loans they give. But like I said, if you're a beginner, don't go for loans. You're going to them, but what you're asking for is funding on the basis of equity. If they can't do it, they may have customers, right? A lot of this bank know their customers, and I've had cases where a banker says, "Hey, we as a bank, we can't do this, but we have a customer who lends people money. He might be able to deal with you." So what they'll do is that they'll arrange a meeting between you and that customer who has money but doesn't know what to do with it. So that person can come in and, put down that money on the basis of equity. And so they'll say, "Okay, I'll fund this business. I like the business plan, okay? So, but what I'm going to do is that I'm going to give you the complete funds that you need, but I want to take 30% of the business. If it's good enough for you, then you deal." For me personally, I love that. Like I said, it gives you a breather. It gives the business a breather. You're not worried about paying back loans immediately from the first month. Now, the beautiful thing is that
He has invested in that business, and so the business can start to run. But because you're good at conceptualization, you can also come up with another idea and look for funds, to with another person. And so that means the 30% you're losing here, you'll gain from the next idea that you actually pitch to another person. So that's a great way to actually go about it. I don't know if that answered your question.
Okay.